Hi, welcome to McBoss Capital channel. My name is Michael Chu. Today we're going to talk about potential meme stocks that you could buy possibly in 2021. All all information shown here are not for investment purpose. They're not meant as investment advice. So a common question are, what are meme stocks? Meme stocks, and this is the first Google search result, are the shares of companies that have seen a recent surge in viral activity, which is usually fueled by online social media platforms such as Reddit and Twitter. The buzz over a particular stock prompts retail traders to buy the stock with the knowledge that its share price will likely rise. So this is from cmcmarkets.com. One of the stock that gained a lot of traction earlier in the year in January 2021 was Gamestop. The symbol was GME. You probably might have heard it all over the news, and it prompted a lot of retail investors to possibly even buy this stock for the first time, buy a stock in the stock market. So, where do you find meme stocks? Well, the easiest way is to follow the social media. One really important social media is Reddit, and it has an account there called Wall Street Bets. You can either hit this link or you can search Reddit Wall Street Bets on Google search engine, and you will find it. And what do people do with meme stocks? Well, the idea is that a group of retail investors go on online media platform, and they had this herd mentality where one would convey to others that, hey, this particular stock um, could rise in the share price significantly, so other people might start to follow and do the same thing. Obviously, early participation will win because they're the one who possibly buy at a lower price, and the last to this party will probably lose because they're going to buy at a higher price. So one of the things we're going to talk about is make sure you don't want to be the last person who and buy the stock at a higher price. Obviously, this type of stocks may have huge risks, um, but they also come with big reward. So you know, you have to be willing to lose possibly all of your money if you're going to invest in meme stocks, and because they don't really trade on fundamentals based on their financials and so forth. So in terms of evaluating what the stock price should be, it may not matter in the short term. So um, yeah. So I just want to talk about technicals versus fundamentals. Again, technicals, really, these are momentum driven stocks. So it could last a very short time period where the price would rise significantly, and then it could fall really fast as well. Generally, you will experience exponential price increase in the short time frame. On the fundamental side, really, it is really out the door. There's no it really doesn't make sense in terms of how much the price have rose versus what the company should be worth. Although some retail investors may claim they're undervalued, but most of those claims are really based on unpredictable future. So really, you could say anything you want. Some of the tips we're going to talk about when looking at meme stocks is definitely you need to have it on your watch list and be ready to buy. You want to buy early, as we mentioned earlier. So look for strong breakout from a base of some sort, like a price consolidation. And when they break out, it should have high volume. The higher the volume, the better. And also, it potentially could gap up as well in terms of price. So uh, in terms of once you buy it, how to hold or sell, some of the key technical things to look for. And again, we don't really look at fundamentals, but of course, sometimes there are news. For example, if the company decide to offer to sell more shares in the public offering, that could dilute the shares and that could bring the stock price down, stuff like that. But we're gonna follow the technicals more closely. So for example, if it drop on lower volume, that is okay. You may want to take some profit just because there's some weakness there, but it's not a complete sell signal. You may hold, right? Make sure it stays above key moving average, such as the short-term 10-day. That's a very key important indicator for meme stocks. Because they move really fast, really quick. So the 10-day could be your, you know, potential stop loss there. You could take some profit there, or a stop limit that could help you take some profit. Um, generally, it's hard to draw a channel line for a short time frame. So, but sometimes you could draw one if it lasts a little bit longer than 1 week or 2 weeks. But it's still going to be hard. But usually, you will witness exponential price move, and that could be an indicator that it's time to take some profit because no stock ever go up forever. So if you 2 times, 3 times, or more your money, you should take some profit so that at least you have some recover most of your original investment. And if you want, you could let the rest ride, as long as you want, and not have to worry about losing your own capital, your original capital. Um, and the last thing here that's very important is not all breakout are going to work. Some might break out on the first day and then it falls back and may never go back up again. So that's the risk. And some may even break out, further, but then eventually even came back lower than the breakout price. So sometimes you're gonna lose, and hopefully when you do lose, you lose little, and when you do make money, you make more than you lose. So that's the game of this playing with the meme stocks. So a few important things there. Um, some meme stocks to watch. Um, you know that comes up from Wall Street bets that we're gonna look at. So I'm gonna come back to this we're gonna go to Wall Street bets right now. So here's the if you're on the mobile phone, this is what it looks like. And I like the mobile phone version rather than the desktop version. So I've switched to the mobile version here to show you what it looks like. And you can see different thread here for certain topics, right? For example, this is the discussion on the weekend. People now are because the market is closed, and they're just kind of discussing what's going on. Here, it talks about what potential earning release for the coming week that could be important to some stocks. Um, so you can kind of go through this, and then there's advertisement and stuff. But as you move through them, you usually will see names. So clean energy is one of them mentioned here. So there's a shareholder meeting on June 14, right? So it's important to pay attention to the stocks that people are looking at. Um, this one, UWMC, so that you can see people are looking at this one, and you can see people are hoping this will go to the moon, right? So very important. So you can see quite a few talking about UWMC. So potentially lots of retail investors will be looking at this, right? Ford is another one here. Clean energy again. UWMC. Wish is another one. Another UWMC. WKHS. Workhorse. Right. So we're gonna cover some of this. Clove, which is a big discussion following this past week. So as you scroll through, you're gonna find a lot of meme stock ideas, and there's like I said, you will have to, like I said, go through each one and kind of. So some of the things that I'm just gonna show you how I usually analyze stocks in general, and as well what I look for in meme stocks when it comes to buy point and holding and sell. So let's look at UWMC. This stock is a 16 billion market cap, so it's a medium, somewhat between small and medium size financial mortgage firm. So we go there, and you can see it has a huge downturn, right? Huge downturn right here, and then recently it started to move up again. And as I analyze the daily trades, I notice there's not much distribution, which is, you know, a down day on a heavier volume. And you can see most of the down days here, the red bars volume here is lower than the previous day usually. And so even the most recent one, right, which is a very important uh, indicator here. Why? Because it jumped above the 200-day black line here. So this is a 200-day moving average. It jumped above it, and the next day it tried to test it, which it did, and it closed exactly at the 200-day line. However, the volume is lower, right? And then on Friday it was able to bounce back, right? Right. So it wasn't able to bounce back for a little bit. Now, so the good sign is it didn't continue to fall below this moving average, right? Um, the other good signs are, we are starting to see, we see this green line, which is the short-term 10-day moving average, which is sloping this way right now. So we expect, right, this stock to continue to stay above this 10-day moving average at this slope. Now, it could move faster, right? So that's one of the things that meme stocks love to do, is that as it gets more attention, it may move like in a parabolic shape like this, right? So it could like kind of curve up. So so this is a potential stock to be on the watch list, I think. Um, so that's UWMC, and one of the discussion on the board, on the Reddit board, is that it just got added to Russell 3000 index, so that could prompt more investors looking at it. So anyhow, that's one of the stocks here. So again, mid-size cap. Now the next one that was mentioned briefly was Ford. Um, Now Ford is a bigger cap company, so obviously the bigger the company, the harder it is for it to double in price, right? Just because, especially in a short time frame. So so that could be part of your consideration, right? Now, of course, it could also mean that there's more potential bigger investors investing in the stock, right? So it really, doesn't hurt to have a medium, a bigger cap stock in your portfolio, just because it probably would be more stable. Now, it broke out of this base here. This is the base, price consolidation around, between 11 something to $13. And then it broke out, above the previous high, right? So, and you can see the volume is quite intense, right? It's first day here, the volume's like right here at the really high above the average. And the second day it continues. And as it moves up, you notice there's not much selling at all, right? So lots of accumulation here. So that's a good sign. Um, and then now in the last week or so, it did pull back, right? It did pull back, and now it's sitting at the 10-day moving average, which is the green line, and it's roughly around $15. So what we want to see is that it hopefully can stay above this green line. And if it does rebound off this line and we come to see a higher volume day where it goes up, that could be a cue to buy in. So that would be a lower buy point. So one of the things I like to do is, especially on a slight pullback, I like to draw a line across the highs of that pullback. So now this is the expectation right now, is that it continue to move down. Now, right now it's coming to a key moving average, which is a 10-day. Now, ideally is you want to see it bounce off here, right? And if it does bounce off there and it pass this downtrend line, then we can say that is potential buy point, which is wherever it crosses. So hopefully we will see one of those days, and that could be a new buy point. The previous buy point would be at the previous high here, 1362. So it's nearly you can see here it's nearly a 20% gain already from the previous buy point. Now doesn't mean it couldn't go higher, but obviously it could also go down. So this is a important factor here. Next one is clean energy. Again, this stock also suffer a big correction here, and in recent days you can see it move up pretty fast, right? Um, so again, as it moves up, um, this would be probably the 50-day moving average here would probably be the first breakout point, which is on this day right here, right here. This big blue bar. Now, obviously, if you bought that day, you are currently down, right? Because it has pulled back, and that's usually it does happen, especially on such a uh, on a day where it really volatile. It moves quite a big range. Now, but it is holding above again. So here's the expectation: the 10-day is sloping this way. So we hoping to see that now as it get closer to 10-day, it does rebound and move from here kind of like that, right? That's what we want to see. It should rebound from here. Now, if it fall below 10-day, on usually on heavier volume, that's not a good sign, right? But if it does bounce, that could give you another potential buy point. So the next one that we saw earlier was Wish. Um, so this is an online retail service. Okay, so you can see most of these stocks that are showing symptoms of memes as a meme stock is ones that have corrected heavily, and so now is rebounding, right? So we have this is just one day here, and then the second day move up more, but then it close, you know, lower than the previous day, and now it's sliding back to its 10-day. Again, the green line is very key because that's the 10-day moving average right now. This is the slope right now of the 10-day. So again, it is pulling back to its 10-day. So we hope that it will bounce off and that would be a potential buy point. So most of these stocks are pulling back to the 10-day moving average. Again, it could fall, which means it could pass through this 10-day, which could be a downtrend, right? So most of these stocks are actually at very um, key junction here. Next one, WKHS. Um, so same thing, you can see this huge correction now is rebounding, and we're seeing this potential break above the 50-day, um, you know, and now this is the next day it did go back lower. So that's usually a shakeout of some weak investors. But it's especially after a strong breakout, it's really hard to say, oh yeah, the next day it pulls back down. Does that mean that it won't go up again? Usually it happens so to shake off some weak investors, and then notice how it start to go up again, right? Now the key is the volume is should be at a much lower point, and so the most recent sell day is here, which is you can see how low the volume is compared to the last 3 days, right? So there's lots of accumulation and slightly some selling here. So far it's still good sign. Again, if you draw a green line, I mean a trend line across the green line here, which is the 10-day, you can see the slope is sloping upward, and we are holding steady above this 10-day moving average, right? Again, that is your very important signal for meme stocks. So the last one here we want to look at is Clove Health. So this stock obviously has done really well in the short time frame. Again, we're seeing this exponential curve, or strong price gain, um, and here's the breakout point, which is roughly around this price right here. So this is the pullback. So it's hard to see. So let me go back a few days just to show, especially when there's a strong price movement, it's hard to scale it. So I'm going to move back to, say, June 3rd. So here you go. Now is a better picture. So here, it starts to bounce back off the bottom. And you notice there's only one selling day here in recent days. And this selling day, look at the volume, much lower, right? So that's a good sign, right? And then here is where it broke above the 50-day. So you could potentially say that was a buy point, a lower buy point, right? And then it moves out the next day. So let's keep moving to the next day. And you can see this line right here, this 10-day. So now here where it broke above the previous high. So that's a more conservative buy point. So it's still considered a buy point. So it continued to move up, and here you go. This is the break, so we already broke out right here, and the next day it just went up double, more than double, right? So that there you go. That's the now usually after such a big 1 day run, I would usually take profit just because it's hard to even repeat that. When you see a 1 day run that is huge, like double or something, there's no doubt in my mind I would take some profit. I might not sell all, but you want to at least recover some of your original investment, and that gives you enough money to find the next meme stock and continue investing in other stocks, right? Now, of course, um, often on Wall Street bets, everyone keeps saying the same thing, which is keep holding to until it goes to the moon. Well, not every stock will go to the moon, and even if they do, it's hard to know where the moon is. Uh, so yes, of course, again, this is if you're willing to lose everything, then that's great. Then you can hold forever and hope that it will really go 10 times, 100 times even. But that's a risk if you're willing to take. So everyone's different, but for me, I'm more conservative. If I, make double my money in 1 day, I consider that one of the best trade I've made already, right? So I would definitely take some profit. So if I move forward, um, the next day it went up even higher, right? But then it closed at the bottom of the day. So that's a very bad signal. Generally, it means that, the buyers are really gone because it's closed at the bottom, meaning no one wants to buy at all this price. It just closed at the bottom. So that's a bad sign, and that now you can see it pull back, right? It pulls back, and this is where we're sitting right now. We keep hitting new lows, right? So again, um, I would wait till the dust settle for this one, just because it's gonna take some time to, there's a lot of people who bought at this top here, right? That gonna have to wait till it comes back, and you're gonna see lots of resistance. And you know, the 10-day line right now is here, so the slope looks like this. So it is still above 10-day, and if it does bounce off, and when I say bounce off, like we want to see new conviction, like new higher volume, and when it goes down, it's lower volume, things like that. Then that shows some conviction that this stock could continue to move upward. Okay, so we're gonna, there is other stocks that I'm not gonna have time to go through. that was on the Wall Street bets. There's lots, obviously, but these are some of the ones that are on my list: Cost, BB, Bath and Beyond, Express, Wendy's, BlackBerry. There's more. Okay, but I do want to go back to, for those who care about this, just to study history a little bit, because GameStop was the first one that really significant run here. In fact, I have on my Excel spreadsheet here, right? GameStop on January 13, it was at $31. And then on January 28, it was at 483. And in 10 sessions, it gained 1400%, right? So 14 times your money in 10 sessions. That's unheard of usually, you know. In recent, like starting last month, late last month, AMC was a big winner. Um, the gain was much lower, but still it was impressive. In 5 sessions, it gained 340%. Okay, and these are very conservative buy points. So let's take a quick look to see what happened, right? Because you want to study the history to see how meme stocks trade. So we go back to GameStop here, and we want to go to um, where it all started. So let's just say January 13th. So here you go. So this you see, this is very low price compared to $300. But this is where it all started. This uptrend continues, and it does pull back quite a bit. This is where you have to have a strong appetite for pullback. Otherwise, you may not make the big gains, right? But let's just say you bought it late, right? Let's just say you did buy late, and here's the breakout point, right? Which is this is the high, and it pulled back and rebound, right? It rebound, and this is the 10-day, right? So the 10-day slope is strong right now. Is trending upward, and here's where it broke out. Okay, let's say you bought that day, right? Let's say you got it at this $31 price up here. That was at the end of the day. You could go at any price, but let's just say you got at 31. And then if you move forward, this is what happened, right? It moves up to next day 40, right? Next day it goes down, but notice how it didn't close lower at the bottom, uh, and the volume was slightly lower. So it can be taking some profit here, or you could hold one of those two, and then if we move forward, now it moves up again, right? You can see it make a new higher low, right? And volume came in. This is exactly what you want to see after a sell day. So okay, then move forward. Now we have another sell day. Again, notice the volume is lower, and notice where it closed. It wasn't at the bottom, right? Boom, another day of upward. So you can see again, volume came in again. Buyers are coming in at a higher price. So people are willing to buy. Boom, there you go. Another big day. Now when you slice it, when you see such a big day, I would take some gain. But obviously we all know the end story. It just keep going higher, right? So, like I say, taking profit never hurts. But like I say, you should take some profit here. And obviously this day is a huge gain. Again, you could take some profit there. And here is another second day. Like, it didn't make a new high, but it closed very impressively, which is near the top of the range, right? So there's a huge demand here, continued demand. And then boom, another big day, right? Now, for most people, this, I mean, let's say your strategy is sell 50 and 50 on the first two times, then you will have gone out on this day, which it doesn't hurt. You still make a significant gain around $150, right, on 2 days. Now, if your position is to sell in 3 days, then you will sell one third, one third, and one third here, right? So you will be out by here. Now, we all know this is the top. This was the day of the top, and uh, it did make another high the next day. So look at how big that range is. So when you see such a big range, this is called what they call um, like the range here is bigger than the previous day range. And then look at where it closed. It closed below the previous day range. That's they call it an inside out reversal, which is very bearish signal. Okay. Now you may not have to know that because it doesn't happen often, but when it does happen, it is a very bearish signal. But like what I'm trying to say is you don't have to know that, right? When you see those big gains, you should be selling. You should be taking some profit. No one will ever get at the top here. Um, so don't afraid that you miss out, right? You know, you see now it starts to go back. So what I'm just trying to show is, what happens in history. Usually after a big run, it falls back, and look at how far I fall back. Now we're at 40, 49, um, and it's staying there, and then you can see now it's starting to drift even lower, right? So if I keep moving forward, is now, so people are starting to give up here, and then now we see some interest coming back again, right? And it did try to go up more. So here you go. Here's the second run, right? So for some people who didn't get out, they have some patience. They're able to get back some of your money, but it never came back close to here. So if you bought here, don't expect it to ever come back up here, right? In a long time, right? So let me reset to today. So here's a big chart right now. So this was the first run, and then this was the second run, and then it took a long time, right? Quite a few months from March to June, before it started moving up again. And so now we're at this level, and on the Thursday, GameStop came out with earnings, and it was not good. And also the company wants to, so their earnings wasn't good, and it dropped significantly. So that's a break. Now this break is very bearish in my opinion because it broke below 10-day and 21-day. Usually when it break below 10 days already considered bad for a meme stock, but because it broke below both of those lines on the same day, it just shows lots of investors want to get out. So now you can see the downtrend has begun for the 10-day, right? You can see the slope here. It is now look like this. Now what you expect is, can it break through, or will it continue to slide down, right? So you can watch for this, right? Okay. So thank you for watching this video. If you like what we talked about, and subscribe to this YouTube channel. We hope to talk more about meme stocks in the future. Thank you very much.